Hey guys, the company I decided to invest in is called Penn National Gaming with a ticker of PENN. Penn is a company in the casino industry who recently just bought Barstool Sports. So they deal with online betting, they own casinos, and currently they operate in 19 states, owning 41 casinos, with hopes to expand as states legalize sports betting. They enter the state and put their footprint in. Some numbers about Penn. Currently trades about $82. It's had a 52-week high of about 140 and a low about $4 during the COVID pandemic. Its beta is 2.07. It has a 24.21 PE ratio, and it has a 20% return on equity compared to the industry average of 14%. In Penn's first year since buying out Barstool, they've had $3.5 billion revenue, which is top 10 of its competitors. So with high hopes, what really attracted me to this company is if they hit that the first year as high hopes, things get evolved as COVID loosens up in states, able to produce casinos and able to have this season generate a lot of revenue. So that's what's really attracted me to Penn. And hopefully come these next few months, they can shatter numbers and really expand and help grow.
The name of the company that I chose is Johnson & Johnson, and their stock symbol is JNJ. They are the largest drug company worldwide by overall sales. They are a pharmaceutical company. Their beta is a 0.70, their EPS is a 6.65, and their PE ratio is a 25.10. Standard deviation at a 0.79, and their mean is at a 1.15. The company began in 1886 in New Brunswick, New Jersey, and that is still their headquarters. They are a Fortune 500 company operating in over 60 countries and have over 250 subsidiaries. That's why I chose them.
So the stock I chose is Costco Wholesale Corporation. My name is Christine Green. So the industry that Costco is in is discount store. Its sector is consumer defense, and its stock type is aggressive growth. Costco has 795 stores around the world, with most of them being in the US and the second most being in Canada. It sells mostly to individual customers, but some of those customers also own businesses and will buy in bulk for their companies. They carry food, pharmaceuticals, and they even have gas stations set up in some locations. They have 273,000 employees. They have an ESG risk rating of 23.20, which is in the medium range. And the top 3 material ESG issues are product governance, and that's for the overall company, human rights, which is specifically really for the supply chain, and the human capital, which is also for the overall company. The controversy D level is 3 out of 5, which is pretty significant. So as you can see, these are the financials of it. They have a lot more revenue than they have net income, and it's increased over the last 3 years. And the valuation is increasing currently. The price earnings value is the highest it's been ever been. And of course it fluctuates, it gets low, it gets high, but it tends to steadily increase over time. These are just some of the reasons why I chose Costco, and it's also a company I go to myself and use. So I know the company and I like the company. This is the works cited page. And that is about Costco, the stock that I chose.
Today I'm presenting you Daqo New Energy, the company I choose for my investment project. The symbol of the company is DQ. Daqo New Energy is a Chinese company that is specialized in manufacturing monocrystalline silicon and polysilicon used by photovoltaic product manufacturers. The company counts 1,896 employees as right now, and a stock price of $61.72 out of the 9th September of 2021. Now let me go over some financial ratio and metrics that I find important to analyze. Daqo New Energy is growing really fast in the past 2 years. The earning before interest, tax, depreciation, amortization raised over 186% in the past 2 years. The company is growing really fast. The P/E ratio is 11.43. The stock is trading at 11 times its earning per share. In the industry, the average is between 20 to 25. In any case, that the current stock price is low compared to the company's earnings. Analyzing the free cash flow, I found that Daqo New Energy has one of 605 million. They have sufficient cash after funding operation and capital expenditure more than the competition. Wacker Chemie, a major competitor, has 318 million. I also found that the PEG ratio is 0.924. Under than 1, the stock is considered undervalued and the price is low compared to the company expected earning growth. In conclusion, I think Daqo New Energy has a really good chance to grow in the next years, especially in a world where producing clean energy is becoming the priority.
Microsoft is an American multinational technology corporation. It has MSFT as symbol. Microsoft produces computer software, personal computer, consumer electronics, and related services. Microsoft was founded by Bill Gates and Paul Allen on April 4 of 1975. I choose Microsoft for its innovative technology and because for the last 5 years the price of the stock has been going up. Also, Microsoft has a beta of 0.78, which is good. When the beta is below 1, that means the stock is less volatile. Also have a PE of 37.30 and the price is currently going for $295 and $71.
The company that I choose in this opportunity is B2Gold. B2Gold is a corporation dedicated to the mining and production of gold and other important minerals. B2Gold is headquartered in Vancouver, Canada and traded stock in the New York Stock Exchange under the ticker BTG. There are 3 main reasons why I choose this stock: its management team, financial health, and risk of inflation. B2Gold management have a very long experience in the mining industry. That expertise and experience are reflected in some ratios such as inventory turnover of 3.4, receivable turnover of 70.1, which is above the average, and assets turnover of 0.52, which is also above the average. B2Gold has a good financial health. Total liabilities account only for 17.32% of total assets. Long-term debt accounts only for 1.09% of total liability. Net income has been having a constant increase as well as production costs have been coming down. This improvement has led to a free cash flow growth of 137%, sometimes in the last 3 years. B2Gold is a great company to invest. It has a current price of 3.78. It has a beta of 0.84, EPS of 0.4, but if we see at the PE ratio of 6.73, we can realize that we have a lot of room for growth. If we look at the Yahoo Finance profile of B2Gold, we will find out that Yahoo estimates that this stock can give you an 82% return, which means that the stock is selling at 82% discount. The third reason why I choose this stock is because risk of inflation. If we look at this chart, we can see that gold prices has gone up during periods where government spending and Federal Reserve policies were feeding inflation, such as 2009 and 2020. Now, if we look at B2Gold chart, we can see that during the same periods where gold prices went up, B2Gold prices also went up. So I decided to collect historical data of the last 10 years of both B2Gold and gold from Yahoo Finance, and I ran a regression analysis test on Excel to determine What is B2Gold's beta coefficient with respect to gold? The results are highlighted. As we can see, the results show a beta of 2.23, which means that B2Gold's stock price is 2.23 times as volatile as gold prices. This is great news for me because the general forecast of gold is that its price will keep rising during the next 10 years, which means that if B2Gold's beta value keeps in the same level, the price of the stock of B2Gold will keep rising twice as fast as gold prices. Thank you.